conference call of Brigade Enterprises Limited. We have with us today the management of Brigade Enterprise Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Pavitra Shankar, Managing Director of Brigade Enterprises Limited. Thank you, and over to you, ma'am.
Thank you. Good afternoon and welcome to the Brigade Enterprises Q2FY25 earnings call. I am Pavitra Shankar, Managing Director, and joined today by our Joint Managing Director, Ms. Nirupa Shankar, Directors, Mr. Roshan Matthew, Mr. Amar Mysore, and Mr. Prasanna, our CFO, Jayant Manmadkar, along with the members of the senior management team. We are pleased to report a strong performance in Q2 FY25 with continued progress across all key business segments. In Q2 FY25, our real estate division showed stable performance with pre-sales of 1.68 million square feet valued at rupees 1,821 crores. Demand in our residential business remains strong, driven by a preference for properties offering larger spaces, enhanced amenities, and premium finishes. Collections during the quarter stood at rupees 1,937 crores, underlining the strong execution of our ongoing projects and customer confidence in our offerings. The market continues to demonstrate a healthy appetite for both newly launched projects, and we are optimistic about the upcoming quarters. During Q2, we launched Brigade Insignia in Bangalore, which, along with Brigade Icon in Chennai, is growing our presence in the luxury real estate segment. In our leasing business, we are with a 98% occupancy for our operating portfolio of 8.7 million square feet. The leasing momentum remains strong, particularly in the IT, BFSI, and flexi office spaces, and our buildings continue to attract long-term tenants. The demand across retail spaces remains encouraging, with a mix of lifestyle, entertainment, and dining brands continuing to expand in our malls. Retail sales growth was positive, despite softer performance in the multiplex segment. In addition, the leasing segment generated rupees 292 crores in revenue and rupees 209 crores in EBITDA, demonstrating the resilience of the office segment despite macroeconomic challenges. Rental collections also remained stable, further highlighting the quality of our office assets. Brigade Hotel Ventures Limited, our wholly owned subsidiary, is proposing of requisite approvals, market conditions and other considerations, an initial public offering of its equity shares, and has filed a draft red herring prospectus dated October 30th, 2024, with the Securities and Exchange Board of India and the relevant stock exchanges. Please note this is also why there are some changes in our usual presentation format. We will eventually resume the old format. Looking ahead, we have a robust pipeline for FY25 with new developments totaling 16 million square feet, a significant portion of which will be focused on residential projects. We remain confident that our diversified portfolio and strategic initiatives will continue to drive growth, value creation, and long-term success for our stakeholders. With that, I'll now hand over to our CFO, Mr. Jayant Manmadkar, who will take you through the detailed financials for the quarter.
Thank you and good afternoon. On behalf of the company, we would like to welcome you to the earnings call for Q2 FY2025. Our MD already has shared operational highlights. I will be sharing key financial highlights for the quarter. To start with, the consolidated financial performance for Q2 FY25. The consolidated revenue for Q2 FY25 stood at rupees 1,138 crores versus rupees 1,408 crores for the same quarter last financial year. The consolidated EBITDA for Q2 FY25 stood at rupees 358 crores versus rupees 366 crores in Q2 FY24. EBITDA margin for Q2 FY25 stood at 31%. Consolidated PAT was rupees 115 crores as compared to rupees 113 crores for the same quarter last financial year. Consolidated PAT after minority interest stood at rupees 119 crore compared to rupees 134 crore in Q2 FY24. The real estate segment clocked a turnover of rupees 727 crore with an EBITDA of 15% during the quarter. The leasing segment clocked a turnover of rupees 292 crore with an EBITDA of 72% during the quarter. The real estate collections for Q2 FY25 was rupees 1,454 crore versus 992 crore in Q2 FY24, an increase of 47%. Achieved highest ever quarterly collections of rupees 1,937 crore in Q2 FY25 as against rupees 1,439 crores in Q2 FY24, an increase of 35% on overall basis. With respect to consolidated performance for H1 FY 2025, the consolidated revenue for H1 FY25 stood at rupees 2,251 crores versus rupees 2,093 crores in the same half year ending last financial year, an increase of 8%. The real estate segment clocked a turnover of rupees 1,460 crores with an EBITDA of 14% in H1 FY25 as against rupees 1,434 crore with an EBITDA of 11% in H1 FY24. The leasing segment clocked a turnover of rupees 554 crore with an EBITDA of 74% in H1 FY25 versus turnover of rupees 444 crore with an EBITDA of 74% in H1 FY24. The consolidated EBITDA for H1 FY25 stood at 686 crore versus rupees 572 crores in H1 FY24, an increase of 20%. EBITDA margin stood at 30%. Real estate collections increased by 39% to rupees 2,643 crores in H1 FY25 from rupees 1,908 crores in H1 FY24. Overall collections for H1 FY25 was at rupees 3,544 crore versus rupees 2,683 crore in H1 FY24, an increase of 32%. Net cash flow from operations stood at rupees 1,100 crore in H1 FY25 as compared to rupees 719 crore in H1 FY24, an increase of 53%. Coming to the debt position and its breakup, gross debt of the company stood at rupees 4,640 crore as on 30th September 2024. The cash and cash equivalents stood at rupees 3,784 crores as on September 30th, 2024, which includes rupees 1,356 crore out of QIP funds. Consequently, the company's net debt outstanding as of September 30th, 2024 is rupees 857 crores. Net debt equity ratio stood at 0.15. With the successful issue of QIP, which was oversubscribed by 10 times, continued robust cash flow and available debt lines, the company has strong liquidity position to meet its expansion plans. I will hand it back to the moderator for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit from HDFC Securities. Please go ahead.
Hi, Parikshit. Congratulations on a good quarter. My first question is on the approvals in Karnataka. So we have been hearing in other calls also from your peers there has been delays in getting the project approvals. So you can update us.
Parikshit, Pradyumna here. Can't hear you too well. It's not too clear.
Is it better now? Hello?
I would request you to please use your handset.
I'm using my handset. Is it better now? Hello?
Yes, sir.
Yeah, please go ahead.
So my question was on the approval process in Karnataka. There has been issues of late. I mean, we have been hearing even from your peers, other peers, that there has been delay in getting approvals. So just wanted to understand your views on where we stand and how has the process improved now for the industry.
No, it's true, Parikshit. There have been some challenges on the approvals front. We ourselves, were hoping to launch a little bit more than 2.6 million square feet in the previous quarter in Q2. However, having said that, we are now in the process of getting the last leg approvals out in Q3, maybe start of Q4. It is sort of getting better now as we speak. But there has been this challenge, and for that matter, I think it's not only restricted to Karnataka, Bangalore. It's we're seeing these challenges in both Hyderabad as well as in Chennai. While we're getting most of the approvals through, it's just that final leg of getting the plan sanction out and the RERA approval out is taking a little longer than usual or anticipated.
Okay. But so when I look at your numbers, the demand is very strong, which is like in the pre-sales of 1,800 crores, which is much ahead of my estimate. So if you can help us understand how much was the contribution from the new launches. So if you can highlight what were the new launches, what was the sales contribution from new launches, what was the sustaining sales, and what is the pipeline for Q3?
Yeah. Pavitra.
Yeah. So in Q2. We had just a very small proportion from completed, but about 47 to 50% from new launches ongoing. So when we define new launches, it's not just what got launched in this quarter of Q2, but basically in H1. Those projects that we launched, I think we launched about 5 or 6 projects. In Q2, we launched Brigade Insignia in Bangalore, which I mentioned earlier in the premium segment. Cobalt Block in Brigade Eldorado, and a smaller project called Nebula in Brigade WTC in Chennai. It's a very small project. But we have seen very good momentum coming from both Cobalt in Insignia, as well as a previously launched block in Eldorado called Beryl. Also Valencia, the second block of Valencia in Bangalore, and of course Icon in Chennai is doing well, although there we are not really pursuing like a volume strategy. It's more about a super premium project where it depends on realization. So across the board, I have to also say that the performance in the ongoing projects and already and under construction projects has been strong across the board as well.
And Pavitra, the pipeline for Q3, the launch pipeline for Q3, if you can, how much of million square feet or in terms of value, if you can help us understand your planning to bring to the market?
So it's difficult to, again, because of approval timeframes, really sort of tell you exactly what will be launched in Q3. But in Q3, we're looking to launch in Hyderabad, potentially in Chennai in Q4, and a couple of projects in Bangalore as well. So it's a bit, uncertain whether we would get these approvals the next 6 weeks or so. But for sure, here a lot of the projects that we had envisioned for this financial year, we do intend to still have launched. So I think while there are delays on the approval side, we will still see the launches. It's a question of, the time that we would have had to sell. But considering that the market is also still strong, I think, we should still be able to perform quite well for the financial year.
Okay. This is the last question on margin. So if you look at historical, the sales which you are recognizing on the resi side right now, booking around 13% margins. But for the sales doing right now, so Q1 and or Q2, so what kind of embedded margins do you believe these pre-sales would be carrying on for Q1 or Q2?
Yeah, so definitely seeing in the EBITDA margins today, we are assuming costs also sort of hold up rate. So if we do that, then we should definitely see north of 28-29% in terms of EBITDA margins.
Okay. Sure, Pavitra, I have some more questions. I'll join the queue. Thank you.
Sure.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Saksham from Ambit Capital. Please go ahead.
Hi, is my voice audible?
Yes, sir.
Yeah, hi, good afternoon, everyone. I have two questions. First question is primarily related to the commercial portfolio strategy. As noted, the commercial portfolio contributed around 6% of pre-sales in the current quarter. With the company planning to add 3 million square feet for the commercial portfolio, what is the strategy moving forward? Will the new space be leased out, or will it be sold, or a combination between the two? And I'll go with the second question also. Can you provide more insights on the company's plan to expand its residential portfolio in Chennai market? Where do you see the company's market share in the segment over the next 3 to 5 years? These are two questions from my end.
Nirupa here. See, basically, every time we take on a commercial project, it really depends. But overall, we expect we doing project 5 million square feet in the commercial segment, and all of that is actually just for leasing. But sometimes, in case there is a very good opportunity, we might consider a sale for that. But currently, we have about 2.5 million under construction, which is currently all slated for leasing. Right now, only the Brigade, the twin towers, one tower, 550,000 square feet, is slated for sale. We are also looking at Padmini C block for sale. Yeah. So your question on residential in Chennai. As you have seen, and over the last couple of years, we've been expanding our presence in Chennai across all segments. I wouldn't say it is only residential. But as of today, I would say our market share is not really among the top few in Chennai. Maybe we are within the top 3. But I think considering that we have another 12 million square feet of upcoming launches and pipeline for Chennai, we should be we will certainly maintain that top 3 market share and continue to keep building on that. The focus for Chennai is again mid-segment. Couple of projects that are premium, similar to Brigade Icon as well. And all of our locations in Chennai are really top-class locations with high demand. So we're very confident of our Chennai growth.
Sure, that is really helpful. Thank you.
Thank you.
Sure.
The next follow-up question is from the line of Parikshit from HDFC Securities. Please go ahead.
Thanks for the follow-up. So, Pavitra, again, referring to my other earlier questions on if the launch delays continues and if you're not able to bring these launches, so do you think there's a possibility that H2 may actually see a decline in terms of pre-sales?
Well, if not H2, it will certainly be in Q1. So it's I would say we are sort of forced to look at this business on a quarterly basis, but I would say from a demand perspective and project profitability standpoint, we don't have any concerns on that front whatsoever. We do expect a substantial portion of our H2 numbers to be coming from the new launches. So certainly if there is any impact on that, then our H2 numbers will also be impacted. But as I mentioned earlier, we have substantial amount of ongoing projects. In fact, we have around 4.7 million square feet of existing inventory before we launch anything in Q3 or Q4. So we will still look at, trying to maximize our sales in our existing and ongoing projects. And in addition, trying to make the best of whatever time we have in the rest of H2 to drive sales from our upcoming launches.
But you see a probability of like all these launches bunching up in the Q4, Q3 maybe it's like kind of a miss if you are not able to get approvals.
Yeah. That's the way we're looking at it from our direction.
Okay, so Q3 declines and then
it's not like we are not in the early stage of design approvals on any of these. It is either just at the very final stages. So it's just a matter of getting the things out in hand. So we are not, deliberating in terms of having any comments going back and forth on designs or whatever. It is just literally getting the approvals in hand so we can launch.
Yeah.
So the question is not on demand. The question here is that you're not able to bring the supply. So that's why Q3 could be, if things don't work out, could be a decline. Maybe out of the 3-4 quarters, worst could be third quarter, and then you see a sharp uptake as launches happen in Q4.
So absolutely no question on demand. I think demand is very strong. Like I said earlier, we need to see the launches come in to get the kind of numbers we would like to achieve for the second half.
Okay. So, but as of now, you're maintaining the 15 to 20% kind of growth over the last year of 6,000 crores of pre-sales?
Providing we can launch, yes.
Got it. Just another question on business development. So one is that you had raised this money, and one is that you already were doing. So what was the total business development, new business or new sales value added in H1FY25? And from the proceeds from the QIP, how are you looking to deploy it towards new land acquisitions?
So on the QIP, we basically raised the funds for growth of the organization, focused a lot on the residential sector. In terms of business development, I think every year for the last 2 years we've been doing about 1,000 crores of business development activity. In the past, I think 6 months, we've added around 5 to 6 million square feet of product in terms of the business development activity, and continue to see good opportunities both for outright as well as joint development. We did raise the funds so that we would be ready for more outright and larger projects on the JD basis as well.
So this fund QIP proceeds will also go, part of that will go towards the hospitality, or now hospitality will rely, the money in the capex will be funded from the proceeds of the IPO. So how will you allocate this money? So or this largely be resi and commercial, and then hospitality, like it's on its own, gets money from the IPO proceeds?
Yeah. So we raised the funds in BEL for the QIP predominantly for the residential business. Since we have filed the DRHP for hospitality, we won't be making too many comments on that.
Okay. But largely this is for every business, is QIP?
Not for, as I mentioned earlier, it is for the residential business.
Okay.
So it is not for hospitality.
Sure. Okay, Pavitra. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, and thanks for taking my question, and congratulations for a great performance. So my first question is regarding the upcoming launches. Our share of launches on the resi side over the next year is about 10.5 million square feet. So fair to say this would have a GDV of somewhere between 10 to 12,000 crores?
Yes.
And the 3 million square feet upcoming commercial projects, these will be largely on the lease model, or can we look at a sale model going ahead also?
Currently, these are all for leasing.
And these will be largely in Bangalore, or you will have some portion coming up in the integrated project in Hyderabad also? Will that also form a part of this 3 million square feet?
No. So the commercial part in Hyderabad has not yet been launched. In the ongoing projects that we've mentioned in our deck, everything is in Bangalore except for Square, which is in Trivandrum, and Brigade Tech Boulevard, which is in Chennai.
And just to add to what Nilsa was mentioning, the Hyderabad one we still haven't considered as part of our future launches.
Sure. The other is a data question for Jayant sir. So what were the BTG and the WTC rentals in Q2?
Sorry, could you just repeat that again?
What was the rental contribution of BTG and WTC in Q2?
WTC was about 50 crores in Q2 FY25, and BTG was about 63 crores in Q2 25.
Sure. Thanks and all the best.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Yeah, thanks for the follow-up. So this is with regards to the potential usage of the QIP proceeds, considering that we already have a substantial pipeline in Chennai. Would it be fair to assume that bulk of these QIP proceeds will be used for business development in Bangalore and Hyderabad, or are we open to looking at any new city also?
So it will be for Bangalore, Chennai, and Hyderabad, all three cities. Chennai is also part of the plans for as far as the QIP proceeds go. But having said that, it's only limited to these three cities. We're not looking at any other geography at this point in time.
Sure. And any update on the Coca-Pet project? By when can we have some clarity on that?
So the target continues to be Q3 to launch Brigade Neopolis. We are tentatively calling it Brigade Gateway, Hyderabad for now, because it is a mixed-use development along the lines of Brigade Gateway, Bangalore. And like I said, we are targeting to launch it in Q3.
So on that project, we will be launching residential first. So that's also why we have mentioned that the commercial will not be part of our upcoming pipeline. So we plan to launch residential and then eventually launch the commercial block.
Sure. And lastly, what would have been the share of Bangalore in the Q2 pre-sales?
About 90%.
Sure. Thanks and all the best for future.
Thank you.
Thank you.
The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question. Congratulations on very good set of numbers. So my question was with respect to our residential real estate vertical. So what I observed from the data they've given in the presentation is, we generally used to be around 6,000, 6,500 sort of number in terms of weighted average realization till some time back. And we gradually moved to almost around 10,000 rupees a square feet sort of number. And even in the launch pipeline, the way you're guiding in terms of GDP potential seems that it's mostly 10,000, 12,000 rupees a square feet sort of number. So is it that, what part of this, the shift that we've seen from 6,500 to 10,000 would be because of the organic price appreciation that you would have experienced in the market, and how much of this would be essentially because of the change in the product? And is it, fair to assume that we've moved up, in terms of the product that we offer now compared to what we used to offer, let's say, 3-4 years back?
Yeah. So if you look at the quarterly APR trend over the last couple of years, as you mentioned, it used to be around 6,000. Even as recently as say just 5 quarters ago, it was more like 7,000 rupees. In terms of the like-to-like price change, it's moved from about 7,000 to around 9,000, 9,500. So the typical mid-segment or slightly upper mid-segment to sell is around an average of 995. Again, that can change depending on which sub-market you're looking at. But in terms of the product itself, product change moving into more premium and luxury category projects, I think that is where we are seeing the shift go beyond and upwards of 10,000 on an average. So, Icon, where the average price per square foot is 1,000 rupees, that is going to contribute. Some of the insignias also north of 12,000. So that's all causing the average to increase much above 10,000. And I think it's also a contribution of which are the projects that are selling and which ones get launched. So I think in the next few quarters, we should still see average price realizations above 10,000 or so. Sure.
In any thoughts on would you want to kind of go even more premium? Let's say even beyond Icon, which is where you'll all still get to have some more movement in the average realization. And generally, what we get to have from the market is essentially people are saying that it's difficult to be able to find quality contractors. So is it a conscious decision on our part to kind of balance between volumes and value? You don't intend to take up more volumes. Part of the growth also needs to come from value, which is where you'll be able to kind of optimize construction, even if there is, let's say, some dearth of contractors in the market. Or how should we see it? When you say 15-20% sort of growth, would it be a function of more volumes than value or more value than volumes?
So I would say that, we want to play across all segments in the residential space. We'll go where the opportunity is presenting itself. If in future there was affordable housing, we would look at that too, if there was opportunity there. But currently, there is a lot of demand in terms of premiumization of consumer demand itself, whether real estate or any sector. So that's why we are capitalizing on this trend. We are open to any kind of opportunities, including higher priced products than, say, a Brigade Icon in Chennai. We just need to find the right land parcel and put the right product in that situation. But we do see the maximum amount of demand coming from mid-segment, whether that's just starting to skew towards upper mid-segment, as we're seeing today, then focus that we have. But I want to reiterate that we are not sort of boxing ourselves into one product or the other. In residential, we're open to opportunities across the space, and I think that's the best approach for us, as we're already looking only at 3 markets in Bangalore, Chennai and Hyderabad. We'd like to play across the entire residential spectrum.
Sure. And on Twin Tower, because we're almost there, there's hardly any capex left. Any thoughts on the way the demand is, the inquiries or LOIs? If you could share your thoughts on have we started engaging with the clients for the area that we intend to kind of lease out?
Yeah, so I think that's a relatively new market for office. We are one of the first projects there to get OC. The Tower B is one which we have included under the real estate segment because we've kept it for sale. We've seen very good traction from an end user customer to in the local domestic market, and a lot of the people using the space are from our domestic companies wanting to upgrade their office spaces. So we're getting a very healthy rate of about higher than rupees a square foot, which is good for that market. So kept for sale because of the demand for it, and the Tower A we have kept aside for leasing. So we plan to finish one tower before we move on to the next. But if the demand for purchase and owned offices continue, we at the right time might consider even putting Tower A under the sale part of it.
Sure. And just one last, if I may please, on the capex side, I think the slide suggests we still have around 700-800 crore rupees to go on capex. The balance amount which is yet to be kind of spent from our side, and the launch pipeline gives us a number of almost around 3 million square feet that you intend to launch. Let's say around 1,500 odd crore with incremental capex. Given the fact that we still have some more capex to go, so fair to assume this 3 would be spread out. We won't get to have this entire thing come through in this year itself, which is where suddenly the capex pipeline would go up from 700 to 2,200 odd crore rupees sort of number. Would you want to phase this out or?
Yeah, the capex is typically phased over 3 to 4 years.
Okay.
Yeah, whatever is mentioned, especially in the upcoming launches, that will be phased out over 3 to 4 years over the course of the development of the project.
Okay, sure. So if you get to have the permission, this entire 3 million square feet could come to the market, and you would start construction on the entire 3 itself.
Yeah, that's the intent.
Sure. Thank you, and all the very best for future.
Thank you.
Thank you.
Thank you.
The next question is from the line of Abhishek Khanna from Kotak Securities. Please go ahead.
I wanted to check what is the share of your attributable pre-sales in 2Q. I think you not shared that number in the presentation. So what is that number out of 18-20 crores?
Sir, can you just repeat that?
Share of?
What is the share of your attributable pre-sales in 2Q of the 1,820 crores that you've done? What is your attributable share?
So we had done, I didn't fully get your question, but about 1,800 crores in pre-sales, about 75 to 80% of that would be Brigade share.
Sure. Second, On the commercial portfolio, your earnings, of course, have improved significantly in the last 3-4 quarters. One thing that I wanted to check, when you say 95% is the occupancy, I would assume you're referring to the committed occupancy, right? What would the actual occupancy be like? And when we're speaking of these 2.9 billion of rentals that you got in 2Q, is almost all of that coming in on the 95% of the portfolio?
So the occupancy that we are referring to is the current operating portfolio. It doesn't include some of the projects like Twin Towers and Padmini, which have not yet been capitalized.
So all 95% of this is giving you rentals as of 2Q, or do you expect this 2.9 billion to pick up further?
No, that's right. It's the same thing. So are you saying is the full potential? Are you saying is the full potential achieved? That's what you're saying?
Yeah. Have you started getting rentals for all 95% of the occupied area, or the rentals are yet to commence for some of them?
Yes, we are getting rentals for all 95% of it.
Perfect. And the last one, when you referred to delays in getting approvals, was it primarily pertaining to the general elections, or was there something else also that was happening in any of the cities or locations that you're present in?
It's a combination. Elections has played a part, whether it's the state elections in some of these states or whether it's the central election. There have also been changes in resources, changes in committees, etc., that have taken time to be sort of reinstated. So all of that we are hoping is now past us, and that we will see more approvals come through in the course of the next 2 to 3 months.
Okay, so it was all largely election-related, state or general, which you think is largely behind you. Perfect. That's all from my side. Thanks a lot.
Thank you. The next question is from the line of Biplav Dev Verma from Antique Stock Broking. Please go ahead.
Good afternoon, everyone.
Sorry to interrupt you, sir. I would request you to please use your handset.
Actually, I'm using my handset.
Sir, we can't hear you.
Hello?
Yes, sir. I would request you to speak a little louder.
Okay. So, good afternoon, everyone. Season's greetings to you all. My first question is on the Chennai market. So, I'm seeing a lot of traction in Chennai market. Are you gaining market share in Chennai, or is the Chennai market itself is growing?
So I would say it's both. The Chennai market, I think, has long been overlooked. Starting from even pre-COVID, both our projects, World Trade Center Chennai, the residences at World Trade Center Chennai, as well as Brigade Xanadu, have really started to do extremely well. And that's also why we started focusing on residential there a little bit more. So market overall has increased absorption, but also Brigade has been able to identify good land parcels, and we expect good absorption of our launches as they come up in the next couple of quarters.
Okay, that's great. And just wondering of the in terms of demand in Bangalore. So of the projects you launched in Bangalore in first half of FY25, what percentage has been sold so far? Ballpark number, just trying to understand. For example, 50-60% has been sold till date, or lesser than that. Just trying to understand whether the demand, if we compare to, say, FY25, is the same or not.
Yeah, so it is, we are not seeing any demand-related issues. We've launched very different types of projects in the first half of the year, especially in Bangalore. We did launch Brigade Insignia, which is a little more premium. So there we have sold about 30-35% of the project already since it launched in the first half of the year. The other projects that have launched have all been sort of mid-segment also. So there also we've seen good traction. Considering it's only been 6 to 7 months, we've sold around 40-50% of the inventory. So we're quite happy with the progress, and we expect demand to continue to be strong even with the upcoming launches.
And my third and final questions, basically assuming that approvals are not an issue, let's be optimistic. And so if that is the case, there is no challenges in getting approvals. I'm just trying to understand what would be the 4-5 key projects there in the pipeline in the second half. Like one you mentioned in Hyderabad and Chennai and a couple of projects in Bangalore. Just if you could give us a breakdown of 4-5 projects, key projects, and their GDV, launch GDV in the second half of FY25.
See, we have around million square feet of launches for Chennai, few quarters. That's about 3 million square feet. I would say the GDV there would be around 3,000 crores. Assume an approximate pricing of 10,000 or so. Maybe that's a little more. For Hyderabad, we have a 2 million square feet project launching. There, I would expect the GDV to be around 2,400 crores there. And then here also we have around say 2 to 2.5 million square feet of projects, which again I would value at around 10,000 rupees a square foot for Bangalore as well. So in that sense, these are the approximate numbers that could be coming up, but we don't necessarily want to mention project names.
Okay, that's fine. So 3 million square feet we expect in second half. 3 million square feet in Chennai we expect in second half of FY25, or this would be over the period of say second half of FY25 and FY26 kind of thing.
Yeah, in the next say in a matter of 3 quarters. May not be necessarily 2 quarters. Say 3 quarters. Yeah.
Okay. Thank you. Season's greetings to you all.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question.
Launch, Morgan.
As there are no further questions from the participants, I would now like to hand the conference over to Ms. Nirupa Shankar, Joint Managing Director, for closing comments.
Good evening, everyone. Before we close, I just wanted to make one clarification to Abhishek's question from Kotak Securities. I think the hard option that we have has not yet started yielding rental at Brigade Tech Garden. So that should yield about another 40 to 50 crores per annum in terms of the rental. Okay. So in terms of the closing remarks, I'd like to share a couple of other highlights that are non-financial in nature. The 108-bed St. John's Medical College Hospital at Brigade Meadows, a unique collaboration between Brigade Foundation, which is Brigade Group's not-for-profit trust, and St. John's National Academy for Health Sciences, opened its doors on November 5th. This hospital is designed to provide affordable, accessible, and quality healthcare to the people of South Bangalore. Furthermore, we will be starting construction of another collaboration with St. John's in our 50-acre township, Brigade Eldorado. We recently also laid the foundation stone for a memorial dedicated to the enduring legacy of Mahatma Gandhi in Chikmagalur. The World Trade Center Chennai is now a premier accredited member of the World Trade Centers Association, New York. This is the highest level of certification from WTCA for a World Trade Center. WTC Bangalore is also a premier accredited member since 2023. Out of 320 World Trade Centers globally, only 17 have attained this premier accredited status so far, and this includes our 2 World Trade Centers. Some of the other accolades and awards received over the last few months: Brigade Enterprises Limited has been recognized among India's top 50 best workplaces for millennials in 2024. Our chairman, Mr. Jayashankar, was honored with the Lifetime Achievement Award by CNBC Awaaz Real Estate Awards. Additionally, he was also honored with the Real Estate Visionary of the Decade Award by Hurun India and Grohe. Happy to add that Pavitra and I have been recognized by Business Today as the most powerful women in business 2024. Our projects, Brigade Trade Center Kochi, won Sustainability Awards at the Society of Energy Engineers and Managers Team 2023. We also received 2 awards at the 4th edition of the Sustainability Summit for Best Sustainable Initiative of the Year. And Brigade Cornerstone Utopia won Residential Project of the Year at the GRI Awards 2024. On that note, we would like to conclude this quarter's earnings call. Thank you all for joining and taking time to hear from us today.
On behalf of Brigade Enterprises Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.